Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. It is Thursday. Happy Thursday, everybody. Well, the stock market fell again today, third day in a row, and this is looking like it's a kind of getting interesting here. Definitely fell today, and we're looking at as I say, 3 days in a row of a falling market. The question is it gonna fall tomorrow? Probably not. I don't think it will. But we have had these distribution days, and it's the kind of thing where, yeah, I mean, it could get worse. I did have a short on today. I shorted Microsoft. I did close it early, though. Interestingly enough, I closed it early. Part of the reason I shorted it was because, of course, as probably everyone knows, Microsoft is going to be laying off about 11,000 people. That is a lot of people to be laying off, uh, laying off. So they probably are seeing some weakness up ahead, and so we want to be cautious about anything going long. I did go long on several things, but they seem to be holding up fairly well. I'm long on ExxonMobil. That's my biggest position long. I did open two more short positions, one on Goldman Sachs and also one on Auto Nation, which is a large retailer of chain of automobile dealerships, and they're having trouble, unfortunately, as well in the market. So hopefully, we're gonna, we're gonna be in a situation where um, we can make some money. Definitely did make a little bit of money on my Microsoft short. Didn't hold it very long. I mean, literally was very very short. I want to show you this chart, and this is the chart of the financial sector in light of what's going on with Goldman Sachs. And now Goldman Sachs is going to be laying off too. They're going to be laying off about 3,500 people. That is an interesting sign because Goldman Sachs is sort of, I mean, it's the Darth Vader of investment banks. They know everything. Matter of fact, many of the Treasury secretaries have been former employees of Goldman Sachs. So they're kind of the inside baseball go to guys. And if they're laying off, something's going on. So take a look at this chart. Very interesting chart. This is the chart of the ETF for the financial sector, the XLF. There's 11 of these, and they carve up the stock market into 11 different sectors, and this is the one for the financials. Um, what happened is we were making some very nice progress until just a few days ago, and then it looks like we're coming down. And this is telling because not only has this come down from 36, it's come down below the 50-day line, the 21-day line, and the 10-day line. So right here, definitely getting a little strength. But this is showing that we're probably going to take a leg down here if it goes below the 200-day moving average. That's this black line here. We could probably see some more destruction in the market. What's happening, of course, is that consumer loans have fallen off a cliff. That's one of the reasons I'm short on Auto Nation, is because car sales heavily depend on financing. Of course, most cars are financed, and with the rising interest rates and the inability for people to pay, the consumer pretty much tapped out. I don't think that they're going to be selling quite as many cars as they did. Obviously, Tesla did lower their prices by 20%. That's significant. So it just kind of says that everybody's hunkering and getting ready for what might be not the greatest trend right now in the market. There is one stock that I don't own. It is a South American stock. Wow, can you believe it? And this one is based in Argentina, which is, you would think it would be terrible stock, but it isn't. It's called Mercado Libre. Symbol on this one is MELI, Meli. This is kind of called. It's actually acting very very well. The interesting thing about this, I was just down in Mexico City, and I saw their trucks everywhere. It's kind of like the Amazon of South America. Very good company, very extremely well run. They're looking actually pretty good. Very expensive stock. It's 1,055 a share, but they're doing pretty good. Their relative strength is 90, and of course, when you're looking at stocks to buy long, you want to buy the ones typically that have a relative strength of 80 or better, meaning that they're in the top 20% That's what you want to look for. But this one's looking good. You might want to put it on your watch list. And this is Meli, Meli, as the symbol there. And it is actually, it's not really considered actionable, but I think you should put it on your list because it might provide a good, a good thing to, a good place to go in the market. I want to show you what I have currently long. Fortunately, we did see a little bit of a rebound today. Target Hospitality. This is a kind of a this is a company based in the Woodlands, Texas, which is down in the Houston area. And what they do is they target the limited service hospitality industry. There are a lot of REITs, real estate investment trusts, that own hotels, and they like to have them just turnkey staffed, and that's what this company does. They will just totally come in and run the whole thing for you. So you can don't you know, you can own the hotel and then you don't even have to run it. You can give it to these guys and they typically will, run the limited service brands such as, the Wyndhams of the world, and it's an interesting little company. It was up today about 14 cents. Unfortunately, I bought in at 1802. It's currently 1788, so I'm a little bit underwater here. Not bad, but a little bit underwater. Exxon is starting to make a move up again. My average price on that's about 113. Currently, it's about 111. So I'm down on that one a little bit, but that's starting to move up against some floor there. So I'm fairly confident in that one. Also, I have a position in Schlumberger SLB. That's based in Houston as well. Interesting company. They're in the oil field services industry. This is the number one sector right now of the economy. It's the strongest of the 197 different sectors of the 197 sectors of the stock market. It's number one in the number one sector, and that was up today, 25 cents, not a whole lot. But what's interesting there is the volume change. Not only was it up essentially in a down day, but it was up with volume in a down day. So that's showing a lot of strength there. It's got a relative strength of about 99, which is one of the strongest out there in the top 1% or so of the stocks currently. Fluor, FLR, this is also a construction company. They do have some big projects in the oil and gas space. There seems to be getting a lot of investment in the oil and gas space. Exxon is due to open a expansion of their facility. I think it's in Bayport, Texas. I'm not sure exactly where it is. It's near the Houston area, but they're doubling the size of it. It's going to be I think it's one of the largest, if not the largest, refineries in the world. So companies like Fluor build these refineries, so they're doing pretty well too. There seems to be some investment after many years of really very poor investment in the oil and gas sector. It seems like now some of this investment is coming on because because the demand's there. So interesting way to go. I had a kind of disappointing day for Lattice Semiconductor. This is a Hillsboro, Oregon company that makes programmable logic chips, which is a very interesting chip in that you can field program these. So they have a lot of flexibility. They're used heavily in the automotive space, and unfortunately, I do think that production is going to go down there. But it was down significantly today, over 4%, and up on volume. So I may have to cut this one loose. I hope not. It may be just too early for the. It may just be too early for the chip stocks. As I said, I shorted Goldman. I shorted it on an uptick. I actually shorted it at 350. It did continue up after hours to 350 and 69. Hopefully, we'll see kind of top out there. I definitely think with the 3,500 uh, reduction in staff that they're going to be having at Goldman, I definitely think that we're probably going to see it go lower. We'll see, but it is kind of poking up against some resistance. I did also short Auto Nation. I shorted that one at about 110.50. So no, I'm sorry, at 111. Excuse me, I shorted that one about 111. So we're down a little bit from there. It's up in volume, but down in volume. So I definitely think this one's weak. And we'll see. We'll see. Shorting is very difficult in any market, but particularly in a market that essentially is showing the major index are showing it is still in an upward trend. How long that lasts, who knows? I don't know. But we're still in an upward trend, so it's definitely showing that. The question is, will it hold long enough for us to make any money on the shorts? We did make a little bit of money on the Microsoft short, but again, that was a very quick turnaround. Basically, shorted it when I found the news that that they were going to lay off all those people. So that's really what I did there. Just kind of a really a very quick turnaround, a very very quick turnaround. All right, let's take a look at some of the questions. Thanks for holding on here. And let's go over here to, thank you very much. Sarah, thank you so much for taking a look at the show. Want to look at the Spider and the SPY and the XLE. Let's see if we can give you some info on that. I got to bring up my charts here. Uh, bring up my charts on that one. And that's going to be, that's the Spider and the XLE. These are two of the biggest ETFs, exchange traded funds, out there. So that's a good place to start. That's a good place to start. Let's get I bring the chart up. All right. Now I have it on Exxon, but I'm going to change it over here to the Spider SPY, and this is the ETF that covers the S&P 500 on a weighted basis, on a share weighted basis. Definitely took a dump today. We were kind of expecting that we would have gotten as high as about 410 right up here, but no, we were rejected at the hoop. Not only yesterday, but today we were moving down. So currently we're below the 50-day moving average, and right now the 50-day moving average is right about 301. 3168, and we're definitely below that. So this is showing a trend, and it does look like, we've come up here, and it does look like, we've gotten resistance, and it definitely looks like we're headed probably lower. The question is how low? Well, I'd like to think that, we're probably headed down. We may pull back as far as, 360 or 370 very quickly because of this. Who knows where we're going there? But definitely, unfortunately today we're third day down. This is showing some movement lower. We may move as low as we may move below the 50-day line, 50-day line. Well, we are below the 50-day, 391, and after hours we're 389. There's going to be a little bit of support there, so who knows what's going to happen there. But I definitely think we're pulling back, obviously, and on the Spider. Let's look at the XLE. This is the Spider Select. This is the XLE, which covers the energy area. I still think even after a year, that this one is where the strength is in the market. It just seems to be, I mean, it isn't quite as strong as it was, 6 or 7 months ago. But, here's the thing about this one, and this shows strength in this sector. Not only is it above the 200-day moving average, it's also above the 21 and the 10. So I want to kind of compare these different sectors really quickly, so we could kind of take a look and see, where's the strength happening, and where is it not happening. Okay, so let's jump on over. Let's see if I can get that up for you. And there we go. Okay, so all right, so I'm gonna um, move on over to the comparison here. There we go. So here's the comparison that I'm just putting, what I'm doing here is I'm just putting the indicated on there. This XLE. I want to show you the XLF. This is the financials. This is where Goldman Sachs is, and also the Spider. And let's look at it for the last, basically for the last 30 to the last 90 days, and that's going to give us kind of a good look All right. So here's what we got going on with regard to these three indices. Well, not really three indices, but they kind of represent that. The spider lowest performing, and it's actually over the last 90 days is down slightly, down about 3%. And so if you bought here at $1, you'd have about a little bit less than $1 there. The XLF had been performing well. It's up about 5% over the last 90 days, but the XLE is better than all of them. Now, if we look at just let's say if we just look at one of the oil companies by itself, ExxonMobil, you can see this is one of the reasons why I currently am overweight ExxonMobil because it's producing better returns than the Spider, the XLF, the financials, the XLE, which is the energy sector. It's doing better. It's up about 20% in the last in the last few months. So in the last about 90 days, it's up. So interesting there. That's kind of how that's kind of how it's looking in terms of where it's at in the market. All right, let's jump on over here. Bomba Talk is a question. Hey, Jim, do you factor in the date of earnings reports when make? Absolutely, I do. Thank you for that question. That is a fabulous question. Here's the rule, and normally, and sometimes I follow it, sometimes I don't. When you're buying a stock into earnings, typically you want to give it time so that you can get a cushion of at least 10% into earnings. If you don't have that cushion and you're up, you probably want to sell at least part or all of your position. Wait for the earnings and see how it trades afterwards. Now, after earnings, that's a different story. But prior to earnings, earnings are unpredictable typically. And sometimes they'll give warnings. The bigger companies sometimes will give warnings. But earnings are unpredictable typically. And what happens typically is that the earnings will cause an event. Now, let's look at Netflix because Netflix just reported today, and initially it was up and everyone was excited. But I want to show you this chart in F. Let's see, Netflix. Let's see, is it NTF? I can't remember this one. NTFL? No. N NTX? No. All right, let's put N in that. We'll start with that. NF. Yeah, NFLX. There we go. Netflix. Gosh, I should remember this chart because I've looked at it a million times. All right, let's kind of zoom in on what's going on, and I want to look basically. Today was the earnings day, and they were. Let's look at their earnings to kind of see what was going on. Oops, wrong one again. Let's go over here. I'm going to put the Netflix chart up here. Hopefully, I'm going to get it right. There we go. All right, so we're looking better there. Okay, so this is the Netflix chart here, and what's happened, of course, is that we've been, it's been moving up, but we're right at where an earnings event happens. So if we go over and we take a look at Netflix and the earnings event, I want to kind of go to the 10-minute chart and show you. Well, this is one of the reasons why you don't want to buy anything. If right before earnings, if you don't have a 10% cushion, you want to close it because here's what happened initially today. This was today. This is the day of the day of the earnings. Initially, after the amateur hour, that's the first 30 minutes to an hour of the day. It's when most of the amateurs trade. I trade that too, so I don't get too excited. What happens? We went up during the middle of the day, but guess what? Right at the end, people jumped out the window, and look at that. It's down. This is quite a bit of a drop just in the last hour of trading. Now, why is that happening? Well, one of the reasons that's happening is a lot of people are getting out of their day positions. They're day traders, they're dumping their stock, and that's the reason why at the very end of the day, typically you get a sell off. That's typically what will happen. So I really think it's very good idea not to be, if you're not up going into an earnings, that's where you want to kind of look to see, that's where you want to sell. So the rule of thumb is 20. If you're not up 10%, it's not necessarily a great time to hold through earnings. Now you're always going to get in a situation you can say, well, Jim, some of the best winners. I agree with you. You can't always. This is not a hard and fast rule, and the reason is because it doesn't it in order to make money, you've got to hold typically through earnings, but not in this kind of market. This market just isn't a strong enough market right now to hold through. So my advice, and it's just rule of thumb, is that you want to basically sell. You want to basically sell before earnings, especially if you don't have at least a 10% cushion. That's what you want to do. This is what happened with Netflix. I mean, had you sold before, you probably would have gotten a 145 price, and the next day, boom, you're going to be down, possibly as low as 137. So you lost 7 points just because you didn't sell before earnings. So I always look to sell uh, before earnings if I don't have a strong enough position, that being up 10% in that stock. So very, very good question there, Mama Doc. Really appreciate it. Here is Lisa. Thank you, Lisa, again. The market is too tough to make money. What do you think? What do you think? Normal bull market starts. Please share your thoughts on long-term experience. Okay, great. That's a good, very, very good question. You're absolutely right. I do believe it's a very hard way to make a market. Now, I do stay in the market. I do. I don't typically get out, but I tell you what, I've been exposed less than 30% to the market really for quite a few months, for almost 7 months. I haven't, I've had mostly cash, and I'm still primarily in cash, though today I started shorting. And what do I mean by shorting? Well, what shorting is when you borrow stock, you sell them, and then you hopefully wait for the stock to go down and buy them back. That's what shorting is. So not I'm long and short, but you're right. Sometimes in a downward trending market, now even though we're in a uptrending leg, this is what they call a bear market rally. Okay, this is a bear market rally. We're probably going to go lower, and we're going to probably go lower on the spider, probably to at least 320. So here's the thing: in this kind of market, there's really the best place to be is either all in cash or short. And the thing is, and that's not easy. I can tell you that because believe me, most people don't know how to short, and even professionals. 95. This eliminates about 95% of the people. They don't know how to short. I'm not saying that I'm the greatest short seller in the world, but at least I know some of the fundamentals of it. So in this market, it's very tough to make money. I agree with you. Um, it's not a sin to be in cash. I think right now you want to be probably at least 45% in cash, maybe a little bit more. You could maybe a little bit less, but you want to be more in cash than you're in stocks right now. So it's just until we get a good signal. Till we get a good signal. All right, Bomb Doc says gold. Well, here's the problem that I have with gold. I like gold, especially if I like gold. But the problem is gold is overhyped because we are in this weird stagflation. And stagflation is very interesting. I'm not saying that gold isn't going to go up, but gold essentially is touted as an inflation hedge. Well, that may be true, but the problem is you can't eat gold. You can't put it in your tank. So gold, as in terms of practicalities, has the primary value is that it theoretically is stable while the dollar or other currencies are inflating. But there's a better, but really, it it isn't because the most important thing right now to have is actually dry powder and cash, or alternatively, be invested in something like the oil sector. Why? Because oil, if you have it and you can sell it, you get dollars immediately. You don't have to borrow, you get dollars immediately. So um, the oil sector is, it's not totally self-financing, but it's much more self-financing than, say, the tech sector. So it's less interest rate sensitive. And this is the key. That's one of the reasons why I have a fairly large position in Exxon. Why? Because Exxon doesn't need to borrow money directly from banks. They can go out and if they need, they can borrow if as well, but they have income coming in regardless of that because dollars are used to pay for their products. And that's not true with all products. Oil, in particular, is fungible in that it is paid for in dollars. That's why the petrodollar is such a big deal. So I give you a long discussion on that. I hope that was somewhat interesting. Hey, Jim, what are your favorite shorts? Maybe Tesla. Well, here's the thing about shorting. I agree with you. I'm looking for shorts. I'm trying to put together a nice short list. That's kind of a catchy name, short list. But I think right now some of the best shorts may be in the financial sector. Okay, and I want to show you. I want to show you B of A. Wells Fargo, WFB. Wells is that? No, let's look at B of A. BOA. BOA is very weak as well. Unfortunately, they're not. Oh, come on. BOA. Why am I? Why is that not giving me the? For some reason, it's not letting me go over to that chart. Let's see if I can get the chart up again. It's Netflix. Let's go to Discover. DIS. Did I get it right? Discover Financial. Let's look at Discover. Discover is a credit card company. Probably know that. You probably know that. But let's take a look at Discover. Let me put up the chart for Discover here. This is what I've been looking at, kind of for potentially for a short. So it's one that I'm going to kind of analyze here to see. First of all, helping me do my homework here. Yeah. Okay. See how this one is. This is what I like to see in a short. I like to see it come above that 200-day line, and then I like to see a collapse. And if you'll notice, this one has rallied back. I may be shorting this one tomorrow because this has rallied back. It went way down below the 200-day moving average, and then boom, it went way back up. So what's going on here? Well, I believe this is a good short, and the reason I believe it's a good short is because it's kind of it's kind of getting into a situation where it may not be able to hold on anymore. It may go lower. So let's take a look. Yeah, as you can see, this is why I shorted Goldman. Now, probably I should have discouraged Discover too, but you'll notice this is today's action on Discover. We basically closed yesterday at 103. We opened at 95. Well, isn't that amazing? Look at that. Look at that. Look at that drawdown. Wow. Look at that. Wouldn't it be great if you shorted and then you opened up and boom, you closed? Well, you know, sometimes you can get that lucky, but usually not. So what happened is like a spring, it came down, went way down, and then it recovered back up to about 102. Say, Jim, why would it do that? Well, the reason is because nothing goes down in a straight line. It goes down and then it bounces back and comes down and so forth. But you'll notice down in the volume, and I'm looking, I think it's the 5-minute chart. You'll notice increasing selling volume coming in there. So this one potentially is a good short because I believe if we come up to maybe 102, that's probably a good place to short it. Let's look at the daily chart to see if that makes any sense as a place to enter the short. You always want to enter a short as it's moving higher. So what I would do is I would look at it here and see it says 101.90. Okay. So my guess is we could probably short that one at about 101.75. That would be my guess because I do believe that it's probably going to open the day up a little bit and then it's gonna drop again. Why? Because look at this downward trend. Look at this downward bar. We move. Everything is very close together. You always want to short as close to these index lines as possible. We're only we're just below the 50-day and we're just below the 200-day. So I would try to short it really at as close to that 200-day line as I could. The 200-day line is at 102.90. Currently, it's at 101.90, so it's a dollar below that. I think we could short this one at about 101.75. That's where I would do it. In fact, I'm going to write this down myself because I'm probably going to do this tomorrow because I do expect this one is going to bounce 101.75. That's where I'm going to probably do a short. Now, here's the thing when you're doing a short, don't go all in. Don't go all in. Just go in with a one full position at the most. Half a position probably was where you want to go. So if your portfolio value is $8,000, you don't want to be shorting any more than about $500 worth of shares because it can get out of hand very quickly. So I wanted to put that out there for everyone. But we'll here's the thing: we can make money in the market, and I do think we're going lower in the market. We can make money in the market by shorting, and I'm going to try to put out stuff on that to everybody possibly that I can. And maybe do a shorting boot camp or something like that for people that are interested. All right, thank you so much. What are your favorite long-term green energy stocks? None of them. I'm sorry to say this. Here's the dirty little secret about green energy. And I don't mean to be I'm not trying to be political about this, so please don't take it that way. Green energy, at least that's the way it is almost totally dependent on government tax credits. So anytime they're passing bills, like the reason that we had so much action in the solar stocks was that they passed this bill that nobody read, and it included a lot of freebies for tax credits for EV cars and windmills and solar, and that's all great. But the problem with the green energy area of the market is that it's really driven not by actual underlying economics. Well, it is driven by underlying economics, but it's driven by tax credits. And if the tax credits go away, green energy goes away, at least for now, because right now, even after everything, oil and natural gas are the two cheapest ways to create transportation fuel. And that's just the way it is. It probably will be for quite a much while. So I'm not saying that eventually we won't get there, but green energy stocks, I think you should stay out of that area, at least for right now. I just don't think you're going to make money there. Where I think you're going to make money, if you're going to go into some of the energy stocks, it's going to be in some of the the usual suspects. It's going to be the big oils. Now there is a big oil that I do like on the long side, not on the short side, and that would be Hess. And I want to show you Hess because I think that it has a very good chart. And I didn't buy it today. I got kind of sidetracked. I didn't buy it today, but I like the stock a lot, uh, and I like it as a long and not a short. So instead of trying to go for green energy, at least for right now, try to go for some green in your account, and I think you could get that with this one, Hess. Now it's near an all-time high, and that would be right here at about 149. I'm going to show you the checklist on this one. This is starting to make a move. You can see it's consolidating up here, and it could go higher. It went higher today in a down market. You want to look at stocks that in a down day are going higher. That's where you want to be. It's got a 90. It's got a 96 relative strength. That means it's the top 4% of all stocks currently. It's coming out of this cup base, and let's take a look at that checklist. It's got a 100% checklist. This is Hess, HES is the name, is the symbol on this one. This would be for a long. Let's look at the pattern record here. We're basically 3% above the pivot. So we are just making some new ground. We're in a good range here. Now, the key though is when to buy it. How far off that 21-day line are we? Well, we're 6.3%. So we're just barely extended. You could still buy it at this level. Really up to about 5% is the rule of thumb. It's a little extended. I probably would want to see this thing pull back just a tad. Where I would try to buy this Hess would be basically at about 151 or 152. This would be long, this wouldn't be short. So I definitely like this one. So instead of the green energy, take a look at some of the big integrated oils because I think that's where you're going to find, if you want to go long, that's where you're probably going to find the best potential. All right, Mr. Jeet, thank you so much. Let's look at Apple and CrowdStrike. Let's look at Apple first and then compare it to CrowdStrike. Apple, let's see. Okay, so what I'm going to do here is I'm going to compare both of these, Apple, uh, AAPL, and then I'm also going to compare it to, well, that's Hess, and then CrowdStrike, CRWD. Now I know I had this one up here from the last one. Let's set the, there we go. Okay, so let's look at these three here. This is one of the reasons why I'm still kind of bullish, even after all this time, on some of the oil and gas stocks. And I want to show you why I am, not just hopefully pull it out of thin air, as Jim Cramer does on the. I shouldn't brag for him, Jim Cramer, but it just seems like he's pulling it out of his rear every time that he recommends to buy. I don't think that's the case. All right, here we go. This is basically looking at 1, 2, 3, 4, 5, about almost 6 months here, starting out here and looking at what's happening. Apple is still doing better than CrowdStrike, no question. CrowdStrike in the last really, really in the last since September is down about 40%. I'll show you these ones that go to the actual chart itself. Apple is outperforming that, but it's still down almost 15%. This is why you don't want to be in the techs, okay? Even though they're trending up a little bit, the overall trend in the big techs is downward. This is one of the reasons I did have a short on Apple. I did close it, but I had a short on Apple. This is one of the reasons why. CrowdStrike is even worse. You see, this is the problem in times of low interest rates and lots of venture capital. These kind of stocks do great, but in times of high inflation and lack of capital, where the banks don't have money to lend, you want to be in the fungible hard assets. That's definitely the oils. This is Hess. You see, in the last basically 9 months, it's up over 30%, and it's starting to trend even more higher. This also has a 100% checklist. So that's what I'm kind of trying to say is that I think that before you invest in an Apple or a CrowdStrike, you ought to look at the oil sector because that's where we're seeing the power. That's where we're seeing the power, and that's where like it or not, that's where the money is moving. What's happening is on every one of these fake outs, that's one of the reasons I shorted Microsoft because, and I did close the short. I made a little bit of money on it. I will probably short them again because everybody has to get out. The big money has to get out of these huge tech stocks like Microsoft, Google, Apple, because they're overinvested in them. And where they're going is they're going to the oils. They're going to the big oils. So that's just a kind of a fact of of things. All right. Let's see. Your account will get blown up. Okay, well, maybe. One of the things to prevent your account blowing up, if you're down more than 7% on anything, you should sell it immediately. This is a rule I followed for many years, and believe me, I read this in. This is the William O'Neill strategy, and it does work. So that's why you won't blow up your account. So please don't blow up your account. If you're down 7% on any one stock, you want to sell it. and then wait for better conditions. Are you holding SLB throughout the earnings tomorrow? You know what? I am. Now, this might be folly. This might be complete folly. Thanks for that question, Sam. I'm going to show you the chart. I'm going to hold it. And the reason I'm going to hold it is, and I said earlier that, you should never hold through earnings if you don't have a 7%, if you don't have a 10% cushion. And that normally that's right. But one of the reasons, I'm going to hold it is because I do think that this sector is going to do well. Uh, this is the number one stock in the number one sector. So I'm breaking my own rules. You're absolutely right. And it's up after hours. So do I expect it to completely to completely hold? Well, let's see. Gonna go over here and show the screen. There we go. So this is the chart of SLB Schlumberger, and what's happened is part of the reason I'm going to hold it is I did buy there. We came down and we tested the 10-day line, and we bounced off that 10-day line today. So I think that we're likely to see some good action. Now, in the morning we may be down, but I think by the end of the day we'll probably be higher on Schlumberger. Uh, Part of the reason is because there's been a lot of investment in this particular area. This is the oil field services area, and as you can see, we have increasing sales the last 1, 2, 3, 4 quarters. And I do think that we're going to get a situation where that's going to be the case tomorrow. That's kind of what I'm seeing. We also have increasing numbers of mutual funds that are moving into this one. 50% of all the shares outstanding are held by mutual funds or hedge funds. Now, the PE ratio is a little bit high. I don't like that. Uh, but the cash flow is strong. And I do think we're going to have strong cash flow in this area, primarily because it's in the oil area. And that is where the strength is. Oil is starting to trend up once again after being down for almost 6 months. So we're starting to see crude move above about $88 a barrel. Now, I think we can go up probably as high as 95. So I definitely think, at least in the near term future, there's going to be lots of drilling activity. So that's why I'm justifying it. Normally I wouldn't do this, and we'll see. I may get my hat handed to me. Believe me, I have a stop in here, and if it moves down 7%, I'm out, and that's just the way I rock. As always, thank you for taking time. Yes. Okay. Um, Believe me, a lot of this is not, this isn't gospel. So don't take um, uh, trading stocks is not an art, not a, it's not, it's really, there's art and science in it, but it's a lot of it is just practice. That's all it is. Because sometimes things don't react how you would think of it. And I've been wrong so many times. I mean, I'm wrong on a regular basis. Now, I don't like to admit that I am, but I am wrong quite a bit. But hopefully we're right more than we're wrong. And you don't have to be right all that many times as long as you control your losses to make money. So always remember that. Can you please share your thoughts on nine? Let's take a look at this one as well. Let's look at nine. I believe this is a an ETF. And okay, this is oil and gas. Okay, this is definitely where you want to be in the market. These are the kind of stocks that you want to be looking at in this market. You want to be looking at this area. Now, this is probably um, this has got several things going for it because it's above $10. We definitely like seeing that because volatility below $10 can be really tough. Nice. It's got a 99 relative strength. That I like buying stocks that have strong relative strength. That's a major thing. But let's look at the checklist to see. And boy, that's a very good checklist. Look at that. It's almost 100%. Very, very nice. Look at that. And let's look at the pattern rec on that. Okay, consolidation. That makes sense. The pivot was at 3, so we're way above that pivot. It's still making its move, The question is, if we wanted to buy this, where would we do it? I want to do it as close to the line as I possibly can. What I mean by the line here, I'm looking at the weekly chart here, the 10-week line. So the 10-week line is currently at 1209. We're currently at 4. So we're extended, unfortunately, at least on the weekly chart. So I wouldn't buy this off the weekly chart. I wait for it to pull back. Um, okay. So let's look at this is the daily chart. And I want to look at that. Yeah, we're 9% above the 21 day. Here's what I would do. It's at 14.8, it's 14.73. I wouldn't buy this for any higher than about 13.50. What I would do is I would put in a limit order on this one for about that. So what I would do on 9, if I were going to buy 9, would be that I would put in a limit order at about at about 13 or so, but 13 or 13.50. See, so I'm going to put 9 limit order. I would say maybe 13.25. We don't want to buy it. If we bought it here, we would be buying it extended. So um, on this, we want to look possibly at putting in a limit order, but putting in a limit order. Oh, it would help if I spelled it right, wouldn't it? So there we go. So here's what I would do on this one. Oh, here's what I would do on this one. If you want to buy this one, I would be trying to put in a limit order at about 13.25. Currently, it's at 14.75. So we'd have to pull back closer to the 21-day moving average to buy it. But you definitely could buy this one, but you don't want to buy it in the position that it's in currently because it's too far above that moving average. We want to buy as close to those moving averages, especially the 21-day, as we possibly can, because that limits our risk on downside. Because what will happen is sometimes you can buy them, everything's looking good, and then it could collapse down. So we want to buy close to the support, and that would be at about 13.25 on 9. Thank you so much for that. All right, probably last one here. This is from Mr. G. Always like your comments so much. Let's take a look at YPF and see kind of what's going on there. YPF. And this is okay. Interesting. Okay, Argentinian company, domestic. Okay, this could be very interesting. This is natural gas. You know what? Buying Argentinian companies makes a lot of sense because right now uh, with the price of natural gas and the price of the peso, we could get a currency advantage here. I definitely like the fact that you're looking at some resource stocks because that's right now kind of where we got to be in the market. Very, very strong relative strength. It's a 99. I love that. We pulled down to the 21-day line. This isn't really doesn't really have a base formed. So I want to look to see how close it is. Yeah, it's a little bit too far at night. It's a little bit too far away from that 21-day line. Again, I would try to see if it pulls back just a little bit to maybe closer to the 21-day line, maybe 980 or so from 1132. I think it's just a little bit extended right now. That's the problem here. You could buy this on a pullback potentially. Also, strong checklist. We're looking at a strong checklist on this one. YPF. Basically, the only thing that we're is EPS, earnings per share, and that has a lot to do because it's an Argentinian company. That has a lot to do with currency exchange. So it's a little bit tougher to do financials on this kind of company because you got the currency exchange issues with it. But it's looking pretty good. Their sales have been up 1, 2, 3 quarters in a row. There's a fair number of funds in it. That's interesting. 92 funds in it. Cash flow is good. And look at that. Look at that PE ratio. I don't, it's rare that you ever see a PE. Usually when you see a PE ratio like this, it's something like, a Turkish company or an Argentinian company. because their currency is just so terrible. They have such high inflation. But this is a PE of 2, so the cash flow on this 764. Look at that. That's unbelievable. Essentially, um, this is very interesting. This is why there's so much of a divergence on the return on equity that's saying only 2% relative to the cash flow. So it's lots of cash flow, not a lot of return. It's a thin, this is a commodity, so you're not going to have the kind of margins, but PE ratio of 2, that's really incredible. Um, I would wait for this one to pull back. I wouldn't buy this. It's just too far extended for me right now. But interesting stock. And yeah, very, very good. Thank you so much for that. Uh, thank you for so much of that. Well, we are about out of time here, but I will be back, of course, tomorrow. It's Friday, and hopefully, we're going to have some good news. We're going, of course, we're coming up on earnings on Schlumberger SLB tomorrow. Hopefully, I hopefully I didn't didn't do the right thing there by potentially by potentially holding it through the by holding it through the earnings. So we'll see what happens. We'll see what happens here. But until that time, please tell everybody about the show if you like it. I so appreciate you tuning in here. Smash the like button. Also, subscribe if you can to the YouTube channel. That's www. Dallas Trading Floor. If you're watching on TikTok, just go to the just go to my bio, click on that, and you can sign up for the Dallas Trading Floor free membership. And on that, I'll be back here tomorrow. So until then, everybody have a wonderful rest of the evening and happy trading.